Hey guys, back for a Wednesday options update positions video. Um, this one's a busy one. I had a busy week, believe it or not. Finally got some premium in, and we'll go over that. And I made some changes to the spreadsheet, and I want to get your input on something because one of the calculations that I came up with I feel is wrong, but I don't think there is actually a right calculation without doing some very serious digging. So stay tuned. I'm going to ask for your help on that and your opinion. And I think I know what the answer is. But anyway, I got a lot to cover here. So let's just get into it. If you're new here, like, share, subscribe, do all that good stuff, and we'll get into it. So these reviews cover the week prior from Wednesday to Tuesday close, which was yesterday. And I show you all the trades I made, all the sell to open puts or calls or spreads, and the buy to close, and the realized profit. I'll show you the maintenance margin, buying power used, all that good stuff. So let's just get into it because there's going to be a lot to cover. So last Wednesday, 10/27, I opened up a WBA, that's Walgreens Boots Alliance. I went out to December 3rd on that one. Did the 45 strike, got $65 for that one. Just did one contract on it. ASO, Academy Sports Outdoors or Online, I forget what it is. I think it's outdoors. Same expiration date, 12/3. Did a 38 strike on it, collected $70 for that one. And then Thursday, we did 4 trades. Started with the USO, that's the US Oil Fund, All Fund. And I did a 48 strike on that, collected $55. Now this is a funny one. I did 2 of these, but this is funny because Meta, META, a lot of you guys know that Facebook changed its name to Meta. And Meta, the ticker symbol META, happens to be an ETF, and it's a growth oriented ETF. I'm probably not going to do a review on it because it's not really, it's small, it's fairly new, and it has a very high expense ratio, but it has a decent portfolio. So a lot of people that were thinking, since Facebook changed their name to Meta, this received a ton of volume. I don't know the difference, guys, between volume and volume. Uh, so I went ahead and I looked at the chart. It's got support down at like $14, and it's trading at 15.47 currently. I sold the 15 strike and collected $40 on that to November 19th. And I figured I'm either gonna walk away with $40, or I'll close it for like 30, whatever, and or I'll buy 100 shares of a decent growth ETF that's pretty new and has a lot of top holdings like Facebook. So it's interesting. It was funny to see that. Then I did KWEB, that's the China ETF. Went out to December 17th, started building out December 17th. Did a 41 strike on it, collected $56, did 2 of those. And then GDXJ, which is the gold miners, the junior gold miners ETF, did a 39 strike on it, got $47, did 2 of those. And on Friday, sold a bunch of stuff. Western Digital, I did a 45 strike, got $62 out of that. I think that's up already 50%. And then I did one of my long TQQQs. I usually go out a few months on these and get a really low strike price and collect a lot of money. And that's what we did here. So I went out to March of 2022, did a 60 strike, sold it for $1.55 a piece, or $155 each. Got 2 of those. That one's up already 20% or so. And then we got PHM. PHM is a home builder. Centex Homes, I believe, is one of their brands that I'm familiar with anyway. And I did a 44 strike on it, collected $70, just did one of those. Las Vegas Sands, they've been hurting a little bit. I did a 34 strike on it, collected $57, just did one of those. Arc G, I did one contract at a 65 strike, collected $85 on it. And then my last play for Friday was an Amazon put spread. So I bought the 2940 for 1833 or $1,833, and I sold the 2960 for $20 or 13 cents or 2013. Yeah, right here. So what you do is you collect the difference in those two. So your max loss here is $2,000, and I got what, $1.80 roughly. Not a great spread, but I wasn't. I just did the buy of the put just to reduce buying power or margin impact, because to put on an Amazon you need a whole bunch of money. So if you put it in a spread, it doesn't take as much. So this is definitely on the lower end of what I like to get out of a position, because this was only $1.80 for 2,000 margin impact, and so that's 9% or whatever it is. I usually like 10 and above. And then Monday, you'll see I did another meta, except I went out to December 17th this time. Did the same 15 strike and collected $50 for that one. And then today, I sold Winnebago. Now this goes one day after earnings. They say earnings is December 16th, but I should be out of these before that. But I sold two. I sold them in two transactions. That's why I have a funny premium there. But I sold the 60 strikes out to December 17th and collected $1 on one and then 95 cents on the other. So 97.5 cents or 97.5 bucks each on average. And then MLKN, this is a new ticker symbol, but it's a name change for an old company. This was the old Herman Miller, which is a office furniture manufacturer, and they're now called Miller. I forget. They bought another company and combined the names. But I did a 35 strike on it, collected $70, and just did one of those. And then today I also did Leggett and Platt. Leggett and Platt missed earnings. They got good support down at $40, so I sold just one at $55. I told some other people about it, and they got better pricing than me. So you're welcome. And then the last one I suggest you not do, but this is kind of a spec play for me, is chgg, chgg. That thing went down almost 50% today. Looking at a chart. I was looking at a chart, and this is what I'm looking at. I just want you to see what I'm looking at here. If I go to the long-term chart here, you probably won't be able to see it because I'm probably not going to zoom in on it. But I'm looking at a $30 support level for chgg, and I think it might hold. And it's going back all the way to October 2020. This is what I'm looking at, even March 2020. But between 28 and where it's at now, it should hold this. If it doesn't, I'll be taking shares probably, more than likely. But I got a $30 strike there, collected $2 of premium for that contract. So $200 I collected for that contract, and so we're good down to $28 at least. So that's it for the openings. Now let's take a look at what I closed. Didn't close so much. I closed a ASO, which is that Academy Sports Outdoors. Closed that one for 15 cents, made $40. Closed my Qs down, got 26 cents for that, or bought it back for 26. Profited $162 in 17 days. bought my call back. I had a call spread on Alcoa. Bought that back for 15 cents, so made $38 in 8 days. ARCG, I had one ARCG out that was expiring November 26th. Bought that back for 36 cents. Made $39 in 11 days on that one. Smith & Wesson, one of my favorites. Bought that back for 20 cents, so $60 there in 27 days. Big Lots, my 40 put on Big Lots, bought that back for 20 cents for $55 in 21 days. Now I had a TNA put spread, and I bought back the put, the protective put, and I lost 32.34. I was trying to buy back the sold put as well, but the price didn't fill, so I'm still holding on to it. I just don't have the protection down low, which is fine. Another ARCG that I had on, closed that one for 35 cents, so made $40 in 14 days. Camping World, I closed out today because they were having earnings after hours, and they blew out earnings, but I still didn't want to take the chance. So I bought back for 20 cents, 2 of those, made $40, which is 50% in 28 days. My Bed Bath & Beyond, made 70% roughly on that one, so $40 in 20 days. And then Kohl's, I wanted to buy that one back before earnings. I think earnings is coming up. Got $54 in 8 days on Kohl's. So those are all the closed positions. So what I wanted to cover is the premium cooking side, and I got some new looks here. So it's not as messy as it used to look, and I got it kind of organized. So here we are, weekend Tuesday, which is November 2nd. I closed 11 positions, opened 17. I realized $533.63 in profit there. I sold $1,760.76 in premium for the week. I have total premium cooking, $3,418.63. So I bumped up my premium cooking by $1,000. My maintenance margin is $29,900. Bump that up. What is that? $6,000. And then my net lick went from $114,300 to $115,800. Buying power usage went from 20.82, went up 5% basically. And then this is the one I wanted to ask about, return on maintenance margin. Now, it says 1.78%, but see, this is dividing I-11, which is the realized profit, with L-11, which is the current maintenance margin. Now, I think a better calculation for this would be realized profit divided by last week's maintenance margin. Does that make sense? Because this maintenance margin is for everything going forward, and these positions are closed out. So I would think that the profit realized divided by the maintenance margin of last week would be more accurate, even though it's not completely accurate, because we would have to just go through the maintenance margin of all the positions and figure out what it was. And I'm not going to do that. So I think this is a little bit closer if we were to do that. So if we were to divide I-11, which is the profit realized, and divide that by last week's maintenance margin. So let's do that. Let's go change that to L10 there. Hit enter. And that's 2.24% return on maintenance margin. Now, like I said, it's not a completely accurate, but it's the best that I can do at this point. But return on net lick, see, I'm almost wondering if we should do return on net lick the same way of last week's, ending net lick, right? Because we ended net lick, and then we closed out all these after that. So I don't know. You guys tell me, but 0.5%, basically 0.5%, and that was per each week. So I'm heading to a 2% return for the month, roughly. So I don't know. Give me your thoughts on it. But right now I'm happy with it. Buying power usage of 25.82. If I close out that TNA position, this will go down significantly. So I still got a lot of room to put on more premium. And I also turned on portfolio margin. So we'll see how that affects the buying power usage as well. So also this month I might have some more deposits going into interactive brokers, so that'll bring my net lick up and my buying power usage down. So I'm really trying to bring the income up on this, but like you've seen in some of my other videos, I do not like to push it. Right? I mean, I think I probably pushed it with this chgg position, but it's one contract, and the $200. I think the margin impact or maintenance margin on this position. Actually, let's check it out. Where's chgg? Where is chgg? Chgg, where are you? There you are. If you're in interactive brokers, you can check out your margin maintenance on a position at any time by right-clicking the position and clicking Show Margin Impact. So at currently $677 is the initial margin on that. So we got $200 for it. Whoops, $200 divided by the 677 initial margin. That's 29.5%. So it's a high risk, high reward type of change there, or trade there. So I don't suggest anybody do it, but yeah, there we go. So give me your thoughts on the premium cooking side. I think that these should be on the previous week balances. It just seems to make more sense to me, right? So let me know, guys. Hope you enjoyed. If you have any questions, leave them down below. Like, share, subscribe, do all that good stuff, and we'll talk to you later. Thanks. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.